All right, good morning, everybody, and welcome back after a nice little holiday, nice little break. Hopefully, everyone had themselves a fantastic holiday period and are ready for what should hopefully be a tremendous 2025. Look, 2024 was an incredible year, right? We did really well. We learned a lot. We improved. We refined our technique. We continued sharpening our edge. And we focused on just getting a little bit better every single day. And that was an incredibly powerful way to basically look at our performance and to basically just like emphasize that we're not living and dying by each daily result, right? If you need to get rich today, then you're going to lose everything tomorrow. That's essentially something that I think has played out time and time again here in the market. And the more that we try to rush that process, the more that we try to force it, the more that we try to do whatever within that context, generally the worse things go. So I think really what we need to realize here that it is the quality of our decisions and stacking up enough of those decisions that puts us up in situations, right, where it ultimately is easy to be successful. One of my favorite things in the world is the Founders podcast. It is honestly just incredible on how it breaks down a bunch of autobiographies of some of the most successful entrepreneurs of all time. And this is something I tweeted a few days ago, but really been sticking out to me here in the last few days, been thinking about it a lot. When Steve Jobs went out and created the new iPhone, he didn't make the new iPhone with the idea of adding $1,000 to his monthly bottom line, or he didn't make the iPhone thinking, okay, this is going to give Apple a $5 trillion market cap, or he didn't make the iPhone thinking, okay, this is going to make Apple $100 million in revenue. He went out and he decided to make the iPhone, and when he made it, he decided he was going to make the best possible phone he could. And if he created the best possible phone he could, then the consequence of that, right, would be the $5 trillion market cap. It would be the extra $100 million a year. It'd be XYZ, right? That was a byproduct of making the best possible version of the product that he was focusing on. And that's the same thing with trading, right? If we're trying to make a trading decision because today I got to make $500, or today I got to make $1,000, or today I got to do this, or I got to do that, then we're just never going to set ourselves up to find any success, right? Because we're going to compromise our process to try to achieve a P&L objective. And the more and more that we get addicted to cheating ourselves of our process, right, the worse and worse our results become. And then because we're chasing that dollar figure, we're chasing that outcome, we're chasing that feeling, becomes impossible to accept it. And so you trade on a tilt or on a mental breakdown, right, until you lose everything. So the emphasis has to be on improving the quality of our process, right? Improving our software, right? Improving our technique, improving our decisions, improving how we learn from our mistakes, improving on how we study our ideas and learn to get better on a day-to-day basis. So that for me, right, has to be the focus, has to be the emphasis. And from there, right, we can really try to get better, and we can hopefully, right, focus on basically, just becoming the best traders we possibly can be. So, 2025, right? If you're not happy with the way that your trading went in 2024, now is the time to change. And if you want to become better, you want to improve, you want to learn, then you have to decide that you're going to commit to improving not your P&L, right? Your P&L is a byproduct of improving the quality of your process. So all this ranting and raving here today, is to stress, right, that it is really all about improving how well you lose, right? Improving how well you study your trades, improving how well sorry. So it's all about improving how well you lose, how well you study your trades, how well you learn from your mistakes, right? How well you focus on those variables. And that is ultimately what is going to make you a better trader. It isn't going to be a magical transition. You have to be deliberate. You have to be specific. You have to be precise if you want to accomplish these objectives. And if you focus on those elements, then you will ultimately find the success that you are looking for. If you choose to ignore them and you choose to chase the result instead of the process to accomplish the result, then you will keep repeating the same mistakes over and over and over again, and you will get addicted to losing instead of getting addicted to winning. Look, December was also a tremendous month, right? And it was a tremendous month, not necessarily because of a P&L perspective. P&L was great, no complaints there. But it was tremendous because I think I got better as a trader at losing small, right? So I focused on cutting my losers as quickly as possible. I focused on buying deeper pullbacks. I focused on closing my trades as my P&L was increasing. I focused on making it easy for me to have a margin for error, right? And that for me was fundamentally the most important element that I could create in my trading. There is no profitable edge if I am a terrible loser. And not taking losses personal and understanding that if I lose $200 when I was expecting to lose $1,000, that makes it a lot easier, right, for me to be green on that next decision, on that next trade, on that next play. And I don't need to force it, right? I don't need to rush it. I don't need to do anything silly. And as I slowly transitioned here to being a little bit more discretionary, right? Having a system, having an idea, having a thesis, but then also being a little bit more aggressive in how often I am trading that. My ability to lose small and lose in control and to take my wins when they're there and not get greedy, anticipating that those wins are going to go forever, is going to be the biggest differentiator between how successful I am and how successful I want to be. So those are going to continually be the elements that I am going to focus on here, right? If I'm trying to give a theme to me for 2025, if I'm trying to set anything else as kind of like a target for myself, then what I am deciding here is that 2025 is going to be the year where I am the best loser possible, right? I'm willing to let the market slap me in the face, spit in my eyes, call me the worst words possible, and it's not going to create that like burning sensation in my heart and make me feel like I need to do X or I need to do Y or I need to do Z. Because all those feelings are temporary traps that ultimately just put me further and further away from my goal. And so from my end, right, I don't think there's any reasons why I shouldn't be able to clear 7 figures trading here this year, right? I don't see why I shouldn't be able to do even more than that. And that fundamentally will start with just simply being the best loser I possibly can be. So I know a little bit of a rant and a rave here. Wanted to set the theme for the year with today's, basically stream. But the primary element, the primary focus, the thing that I think most people struggle with is understanding that you don't have to take a max loss. You don't have to put arbitrary limits on yourself. You can take multiple opportunities, right? Take multiple shots at something if you're staying within your max risk numbers, if you're making it easy to lose well. And when you do those things, then the market will take care of you, right? It'll reward you for those decisions and reward you for that discipline, and you'll make a tremendous amount of money. If you're going to skip those steps, if you're going to try to rush processes that simply just aren't there, and you're setting yourself up to, I don't know, chase a number instead of chasing a process, then that's what you're going to consistently keep doing, right? You're going to keep chasing a number. You're going to keep chasing a feeling, and you're never going to be rewarded for that. And the less that you lose, the more that you obsess over the quality of those decisions, then your win rate essentially becomes irrelevant, right? You create so much margin of error for yourself that you can win on 33% of your trades, 10% of your trades, 20% of your trades, and still be profitable. And so you don't have to focus on these like vanity metrics to essentially make you money. You can focus on the variables you can control, play the game that's in front of you, and then ultimately, right, find the success that you are looking for. So any questions there, team? Does that make sense? I wouldn't understand the agreement that they are joining or taking, being responsible for here this year. All right, good. So, with that being said, right, let's start mapping things out here a little bit. Let's figure out what we want to do here this morning, and then let's go from there. Also worth mentioning is that markets are closed on Thursday, right? So for Jimmy Carter's funeral, President Jimmy Carter, markets will be closed on Thursday. So we'll see how that basically sets up, right, and how things behave here today. And then let's go from there. All right, so economic data here this morning, right? Factory orders at 10, fine, nothing too crazy. You can tell I haven't looked at my computer for a while. Okay, fine. So, and then we got PMI at 945. So it might be a little bit of a slower start here to the day. Might just wait for markets to settle, right, and give us some sort of information before we get hyper aggressive. From a price action perspective, right, we're at a 2 out of 3 to the upside without volume. And then we're kind of at like trend line resistance here, right? We'll see if we can basically get up and over that trend line and push back up towards all-time highs. That would ultimately be the thesis that we're looking for here. And we'll be targeting a move towards like 60-50, right, as our starting point, and then 60, 60, 60, 90, 60, 100, yada, yada, yada. To the downside here, right, we're looking at a rejection off the trend line and then a move back down towards 6,000. So ORB fake out at the trend line, then break down towards 6K. Cool. And then we'll go from there, right? A general would expect it to be probably a little bit more of a bullish market than a bearish market. But let's see, right? You never know. All right, NQ. Similar trend line resistance, maybe a little bit more developed, right? Where we're at that trend line here short term. But same thing here, 2 out of 3 to the upside without volume. And then we're looking for a breakout at 21.8. Fine, not too much needs to change from that perspective. And then targeting like 22 and beyond. Fine. To the downside here, right, it would be an ORB fake out at the trend line and then a rejection back down towards 21.5. And we'll map this out towards 21K. Cool. All right, CL. What's the count here? Bit of a squeeze mode last few days. Pretty impressive rip. 1, 2, 3, 4, 5, 7, 6, 7, 6 green days in a row here so far. Nice little trend line breakout. Very, very impressive. And yeah, spot on here, Jack. 2 out of 3 to the upside with volume. Sorry, without volume. And then CL, right? Probably the strongest trend relative to all the names here that we've looked at so far. Obviously, not to say that this can't continue, right? Or that it won't continue here higher. But we do want to be just a little bit patient, a little bit cautious, right? You know, we don't need to try to call a top here too aggressively until we see very impressive volume showing up. But, yeah, let's see if we can kind of map out here and give us some follow-through, maybe up towards like 76 and then 78.50. So we'll go 74, or call it 75, 75.50, 76, 76.50, 77, 77.50. Okay, and then to the downside, right, it would be like a rejection off of 75. And then break down towards. And we're looking at 74, 73.50. 73, 72.50, and the trend line here, right, that high is like 71.50, so I'm going to map it out towards that area. Cool. What does that mean, Robert? Something just hit news? I don't know what that means, man. All right, Apple inside bar here. So we're looking for a 241 breakdown or a 250 breakout. Okay, Tesla, 2 out of 3 here without volume to the upside. And then to the downside here, it'd be like a 420 rejection. Guys, we're going to make comments, right? Please be specific because it's really hard for me to answer or give any intelligent response if I have no context, right? Okay, Microsoft inside bar here. So we're looking for a 427.50 breakout. And then to the downside here, it'd have to be under 415. Okay, Amazon. 2 out of 3 to the upside without volume. And we're still looking for that 227 pop now at this point. Or, right, I don't know if I see an easy rejection here, to be honest. Maybe. I mean, all these names are giving us, like, that same trend line kind of setup, right? So maybe trend line rejection. Then break down towards 220. Okay, AMD 3 for 3 here to the upside. Pretty big sized gap up, right? So we want to be a little bit cautious about that. So gap filler go, right? And we'll say breakout over 130, right? Just give me that little bit of extra buffer. But hey, if semiconductors start kicking back up here and show us that level of enthusiasm, could be really nice, right? So far, pretty much across the board, we're seeing a relatively consistent narrative from our leading names. That should make it easy, right, for us to get a good amount of follow through if everything continues to remain synced up. Okay, NVIDIA, same thing, 3 for 3 here to the upside. So we're going to look for a 150 breakouts now, right? Or a gap fill and go. And then NA here to the downside, right? Bulls are in control here. Not going to go counter trend until I get it proven otherwise. Okay. Meta 1 for 3 here to the downside. All right, so let's get a breakout over 610 if we're going to be bullish. Or a breakdown here under 596. Higher high, higher low, right? So probably a little bit more of a bias here to the upside than to the downside. But yeah, let's cross that bridge when we get to it. Okay, Netflix. Not quite an inside bars. First one that's given us a bearish scenario here. 2 out of 3 to the downside with volume. So NA here for a bull case. Really the first ticker, right, that is giving us a counter trend environment. We're going to be looking for that 876 breakdown. Or, right, a rejection inside yesterday's range. Okay. And then Google, same thing, pretty much like the same thing across the board, right? 2 out of 3 to the upside without volume. So we're looking for a nice breakout over 194. Right? And then to the downside here, it'd have to be under 190. So bullish bias, definitely easier today, right? But if bulls fail across the board, we've got a VIX elevated at 16.39. So we absolutely could be in play here. And we'll go from there, right? Any questions here, team? All right, fantastic. So we got about 5 minutes here till market open. I'm just going to go make myself a quick cup of coffee, spend a minute or two here sort of visualizing a successful trading day. And then, yeah, let's set ourselves up to have a fantastic start to the year. Should also mention, right, it's first day back trading after, you know, relatively a long amount of time off, right? So today is not really about trying to take a tremendous amount of trades. It's not about really the P&L that I generate. It's got nothing to do with those things. Today is about finding flow again with my process, right? Finding that rhythm, finding the, the comfort in the technique, right? Instead of feeling like, oh my gosh, I missed so much volatility over here. Oh, Christmas was so expensive. Oh, this, oh that, oh this, oh that. And tricking myself into making a decision that I don't need to make, right? So I'm not going to make my year on January 6th. It's really not going to be the case. So it's all about making sure that the quality of my decisions are good. That set me up for a high conviction, basically trading behavior here for the year. And yeah, like it's all about really getting back onto good habits instead of starting the year off with bad habits, right? So that for me is really the primary focus. It's what I care about the most here today. And I don't need to be in a rush to do anything crazy or to be crazy aggressive or to do anything silly like that. I really need to just really focus on the quality of my decisions and focus on, controlling those variables. And if I do, the P&L will take care of itself. If I don't, then I'm just going to keep chasing something that isn't there, right? So, first day back. Even when I worked institutionally, after a long holiday, this would be a day where I trade on sim. Not going to be the case here today. I'm still going to trade as if normally, but I'm just going to be very cautious, going to be potentially sizing down and just really controlling the dopamine here today after a little bit of time away from the market. So, we'll talk about that as things set up and things along those lines. But really what I want to avoid here is like that tunnel vision feeling, and everything's going to be designed to basically avoid that here today. So we'll be back in a few minutes, and we'll set ourselves up for a successful trading day then. All right, so let's get after it here, team. Let's see how markets want to behave this morning. and then go from there, right? Like I said, today is all going to be about the quality of my decisions, not about the quality of my P&L. After a few days away, right, a year away from the market, to make a terrible dad joke, for me, it's all about finding rhythm, right, with my process, finding rhythm with my technique, finding basic comfort, right, in that routine again, instead of trying to chase a P&L number here today. Now, don't get me wrong, I'm still obviously going to try to make decisions that I think make me money. That is fundamentally why I play this game. But it's understanding that from like a first principles basis, it's not placing trades that makes me money, right? That's like a very simple view of it. It's making good decisions, managing risk like a lunatic, right? Closing my P&L as my P&L is increasing. That is what makes me money. Everything else, right, is a byproduct of those good decisions. So if I try to skip those steps and ignore the quality of those decisions in pursuit of a number, I'm just going to chase a feeling that I simply can't replicate, right? Or I can't reliably replicate. And maybe I'll get a good result on one day, but I'm not playing for a single day result, right? Yeah, like I don't work with $40 million positions anymore. So, one single trade outcome isn't going to make my year, isn't going to make my career, right? Isn't going to do anything along those lines. So I can't be forcing a decision, right, on an intraday basis. I need to be controlling those variables. I need to be willing to play the long-term game, and I need to be willing to compound my results if I want to become as successful as I desire. So that's the most important thing, right? And if I'm going to be good at compounding, then I need to be good at losing small, because then it makes it easier for me to compound higher, right? I can compound either to the upside or I can compound here to the downside. I can compound good decisions or I can compound fast decisions. And we've all seen how quickly it can go when we choose to compound our negative and worst habits. And we want to avoid those at all costs. So it's not about being stubborn, right? It's not about trusting that my losses are going to turn into wins. It's about trusting my technique, learning from my mistakes, becoming the best I could possibly be, and understanding that if I control those variables over the course of 10 trades, 100 trades, 1,000 trades, right? That's what's going to make me money. If I try to control or ignore those variables over the next trade and try to just force a process or force an outcome, good luck to you, right? You're going to struggle. You're going to lose money. You're going to get your ass kicked. And we don't need to experience those feelings, right? That is a choice. And we want to avoid that at all costs. So, like I said today, all about getting back in rhythm here, controlling the variables I can't control, having a bit of fun, obviously, right? Trading the market that's in front of me, not the market that I want. And we'll go from there. No speeding tickets here yet, Rusty. Good question. No, sir. I'm a pretty responsible driver, I'll say. Yeah, I don't know if it looks scary, Kiki. I don't know if I agree with that, but we'll see how she behaves. Alright, I just bought a new SUV, Igor. Well, Christmas present, end of the year. A Audi RS Q8. Oh yeah, dude, it's so fast. It's crazy. It's yeah, so rapid. Like you put your foot in the gas, and next thing you know, your stomach's in your in your mouth. Like it's crazy. Gotta say, it's really nice earning in USD and spending in Canadian dollars. I would say that is a little bit of a cheat code here at the moment. Yeah, good morning, everybody. Hope you're having yourselves a great day, ready for a big year. And let's crush. We'll see if the market wants to give us more range than it did last year, something like 23% on the year last year. It's going to be pretty hard to beat. Yeah, it's like, well, when I bought it, it was 45 cents extra. So obviously, right, we've got some data here at 9:45. So I'm going to be a little bit patient, right, with indexes until that happens. Don't need to be hyper aggressive. And then from 9:45 to 10, right, we've got like a 15-minute window where we might be able to get some opportunities. If we don't get something in that 15-minute window, no worries. I've got no problem waiting till 10:30 to place a trade. Like I said, I don't care, right? If I sit on hands here and watch all day, no worries. So, Rogilio, are you inside the Discord? Yes, no? Gotta answer that question, man. I can't help you otherwise. And you can see what time frame I'm on here based on my chart, right? So here it says 3, means I'm on the 3-min time frame. Should be able to see that. I will switch and trade whatever time frame gives me a setup first. But you can always see. So if you're not in the Discord, right, then you've not purchased access to the DTR indicator. So, yeah, sorry, man. You're going to have to just look at it and watch. So I checked the economic calendar, David, right? So we've got on here, right, on Market Watch economic calendar, Monday, January 6th, 9:45 PMI, 10 a.m. factory orders. So just check the market calendar, right, every single day. So far, so muted, right? A lot of our leading names are kind of giving us a bit of a sticky bit of price action. So again, no real rush here to do anything crazy. I don't need to be hyper aggressive yet. And again, right, all that we care about here is we're not here to make money, right? Money is a byproduct of making good decisions. We're here to focus on, losing small, right? Controlling our stop losses, controlling our risk, controlling our expectations, right? Not rushing, doing anything stupid. Yeah. I mean, there's a lot of different economic calendars that are available. I will sanity check both generally. So yeah, pretty, I would say, choppy around this 800 area so far too, right? Not a huge amount of separation higher, not a huge amount of separation lower. So there really is limited reasons to be hyper aggressive here. Just focus on the variables we can control, right? We don't need to rush it. We don't need to overtrade. We don't need to be hyper aggressive idiots. So this is what I think is the trending conditions here, David, right? So 3 for 3 to the upside is the strongest variation of trending markets. A 2 out of 3 is less, right? Strong. You can find all that information inside the Discord, right? With the pre-market conditions checklist, right? It's also highlighted in the strategy documents here. I would highly recommend that you study those materials and don't just assume that you're going to figure it out inside. Yeah, pluses to the upside, minuses to the downside, right? So plus is bullish, minus is bearish. Right? Just basics. So still just being patient, right? Maybe we have an opportunity here on ES, probably a little bit better than NQ. But it's not the best candle in the world, right? That candle looks a little bit more like that least bullish than most bullish. I don't need to be rushing that. Yeah, if you go into settings, Nathan, and then you go into trading, you'll be able to see your orders, right? Tick that in, and you'll be able to visualize it. Also, Google's going to be your friend here, right? It's going to have more information that I could ever provide you, so please use those resources. Like, I am here to help you guys explain the technical side of trading. Why I do things from a risk management perspective, why I do things from a position sizing perspective, why I do things along those lines. How you want to set up your screen, your chart, your ideas is up to you. And I don't really have the mental bandwidth to be able to solve those problems for everyone, because everyone has a different best version for themselves. So please be selfish in that pursuit. And rely on yourself to determine what you want to do. Don't rely on me for that, please. Okay, ES looking a little bit better again. Still not maybe the best candle in the world here. You become a premium member, Jesus. Send me an email, michael@dtrtrading.com, and I'll check. Yeah, so far not so appealing, right, for any tradable action here yet. No real sustained breakouts or follow through in either direction. A lot of our leading names, right, are kind of struggling a little bit here. Like a little bit of a chokehold. So that's making it a little bit tough, right, to get the tremendous amount of clean price action. Like Greg, like you're describing, it is a little bit of a holiday hangover, no doubt about it. Shouldn't be. I've yet to place any trades. Really should not be the case, but I don't think I have any audio settings set up for that to be the reality. I'm going to set a test order here. Let me know if you guys hear it. NASDAQ 100 E-mini futures. It also can find it here, NQ1. All right, strange. Not sure what that was. But here, Miguel, right, you can see on my chart, NQ1 exclamation mark. You type that into your order window. That's where you're going to be able to find the NASDAQ 100 E-mini future. Same thing with ES S&P 500. You type that in, you'll be able to find what I'm trading. All the information you need is available to you on my screen. I'm not hiding anything here. So please, right, use the visual clues you have available to you to answer your own questions. I have not yet, right? I will let you guys know when I place a trade, and I will always write out what my trade is. So I'll always say, okay, looking at an entry, this, that, right? And I will let you know when that happens. That has not happened here yet. I am not going to hide what I am doing. It's not really what my objective is. So please, guys, right? Like, pay attention. Make my job easy here. I can only hold your hand so much, right? There has to be some sort of element to meet me in the middle here. I will always tell you what I am doing. I will always tell you when I'm looking to enter a trade. I will always tell you when I enter a trade. I will always tell you the position sizing I have, the amount of contracts I have, right? What my stop loss is, what my profit target is. It will be clear to you. If there is nothing on my screen here that says in ES long at, right? Then I have not entered a trade, right? So let's focus on the variables we can't control here and make my job easy. I will lose my mind if I have to explain basics all the time. It is not sustainable, right? We got to be able to meet me in the middle here. My job is to teach you how to fish, not to fish for you. So there has to be some sort of level of self-accountability here. Is that understood? The only thing I have done, and I've already said it, right, is I did a test order to make sure that you guys weren't getting some sort of weird sound notification. So I have just closed that test order. And no one heard anything, correct? So cool. Now, right, what we're waiting for here is 10 a.m. data. So we had a failed breakout signal here at 9:45, but no real confirmation, right, of a reversal. So now at 10 a.m. here, we have a possible opportunity to play some sort of scenario here to the downside, or, right, for us to get confirmation of continuation here to the upside. But we're going to wait for that 10 a.m. data to drop before we make any decisions here on how aggressive we're going to be. Like I've said here already multiple times today, first day trading, right, in a while, right after the Christmas break. So today is about making sure that I get back into a correct flow of following my rules, following my process, and finding my rhythm there. I'm not here to try to rush a decision or rush an entry or force any action. I'm waiting for things to be absolutely perfect before I take on any risk here today. So it really is all about controlling the quality of my decisions, not about trying to force any P&L here. If you're trying to force P&L, you're okay, I'm watching the stream here for a day, I got to make money here today. All you're doing is setting yourself up to lose because you're going to over risk, you're going to over leverage, you're going to do all sorts of dumb stuff, and you're not going to set yourself up to be successful. So I'd really think about that, right? Do your actual short-term objectives match up with your long-term goals, and how is your short-term behavior impacting your long-term outcome? Trying to chase a trade, trying to rush into something, trying to copy me just so that you feel alive or that you justified your dollar is a way to lose much more, right, than whatever you've spent. So don't be that, right? Be deliberate, be specific. And I will always tell you what I'm doing, right? I'm always going to tell you guys what I'm doing. Not going to hide that. So don't assume that I'm in a trade when I haven't told you, right? I will always tell you guys what I'm doing. I will always map out my trades. I will always tell you what my position sizing is. Always tell you what my entry target is. I will always tell you these things. So I essentially trade a variation of this sheet, right? So I'm looking for high vol breakouts away from the opening range or high volume reversals, right, away from the opening range to then either target this red line or this red line. Just depends on what the market is giving me. Right now, we don't really have any high volume breakouts, right, on a strong enough candle. So we don't have anything on a most bullish, second most bullish, normal body bullish. And we don't really have any rejections, right, on an increasing outlier volume standard. So David, if you go into the Discord documents, that strategy cheat sheet will be available to you there. And I would use that as your reference point for any tradable opportunities. So far, we've not had anything that has really come close to being tradable here yet today. And please, guys, right, like this is all highlighted in the courses, in the trading docs, and all these materials. So everything is there. Like I'm not hiding anything, right? I'm not do anything along those lines, right? So please go through those documents, create that context for yourself, and you're going to speed up that learning curve a lot faster. So I'm a big believer that you learn in 3 ways, right? You learn by reading the basics, right, and going through the core material. You learn by seeing me go through it, and then you learn by doing it yourself by paper trading or whatever it might be, right? So if you do all 3 of those things together, you're going to be a lot more successful than if you just try to do one, or you think that you're going to learn it all just by seeing, right? You're going to slow yourself down significantly by just waiting for that process. So if you really want to get the most out of this opportunity, you really want to speed up that learning curve, take it seriously. Treat it like a job, right? Create that foundation of knowledge. Create that context so you can actually ask intelligent questions. And then once you have that base level, right, taking these trades, seeing them play out in real time, right, reinforcing your knowledge is going to cement those ideas, make them feel real, and give you new learning points, right, to focus on. Without those elements, then you're just, you're not focusing on your process, right? You're just focusing on your P&L, and it's not going to go well. I can guarantee you that. Yeah, I'm watching CL here a little bit, Sammy, for sure. I'd probably rather see it on the 5-min. And just a little bit cautious, right, about shorting it. Because it's been a straight line higher here in, the last 7 days, 6 days. So it would have to be a really tremendous signal for me to want to go short here. I don't need to front run that first bearish reversal when it's a very obvious bull market here at the moment. And the lack of volume, right, on CL is probably more related to just the recent holidays more than the actual strength of the trend. So ES, okay, increasing volume breakout here, away from that opening range, held above previous high a day. This is setting up for me on the 5-min as something interesting. So now I'm going to start to map out my trade, right? Profit target is that red line. Stop loss here is that red line. So let's see if this thing can give me a high vol breakout away now from that confirmation candle high. And then I can use the low of this red candle as my stop loss. So for now, that's 652. Maybe a little bit lower. Yeah, still 652. So as you can see, right, now I've got my trade boxed in. I'm starting to watch to see if this will give me the correct reaction so I could look to jump into this position. So now stop loss have to be 651.25. And let's see if it will continue to behave the way that we expect. So far, right, it's probably made, it's moved down lower faster than it's moved higher. Right, so not a super strong reaction yet from bulls. But definitely a much better feeling here now, right? So at that 653, risking about 125 bucks, right, per contract. So I could buy 4 contracts here potentially. Too fast of a move, right? See how fast it went from 53 to 51.75. That was like in an instant. So if I'm thinking about if bulls are strong, it's not exactly a strong reaction from bulls there here yet. So I know, right, that this is trying to fake me out before it gives me that opportunity to actually enter this position. So again, no reason to rush this trade yet, right? Now stop loss have to be 49.75. So that would change a few things here, right? I would have to go smaller position sizing. So probably 3 contracts, right, instead of 4. Maybe even 2 contracts, right, if it does set up. But so far, right, we've seen this thing make a couple higher highs and then fake out lower. So maybe not a tremendous amount of conviction that bulls are particularly strong post confirmation candle. Right, we've seen price action move to the downside far too aggressively, much more aggressively than price action has moved to the upside. You guys get it? And if this thing sets up in 50 seconds, right, make a higher high, then maybe I could push my stop loss to be like 53.25, right, get more aggressive with my position sizing, do all those things. So far, right, we've seen price action move lower faster. Yeah, this is the Fibonacci tool here, Nathan. If you go into the Discord, go into a video called Finding Your Formula for Success. It will show you how to set these lines. Again, please go through all the documents, all the courses. It'll show you how to do all these things. Okay. So now we're looking at a stop loss here at the low of this candle, right? 654.50. And it's now moving higher faster, right, than it's moving lower. So let's see if we can find support here. So far, no. Again, no, right? See how now it's moving so fast low, right? That's not particularly fantastic. So that's starting to look a little bit like a failed breakout scenario, right? So now if we're seeing a failed breakout, we want to see increasing outlier volume. So increasing relative to previous bar and above this white line, and a candle that looks like 1, 2, or 3. Nice work, Jeremy. So ES maybe, or sorry, NQ may be a slightly more realistic version of this reversal scenario, right? Back under, I don't know why I said back twice there, but back under 800 here. So already close to that increasing outlier volume. We have an opportunity there. So we'd like to see this candle now close, right, as a most bearish, second most bearish, or normal body bearish with increasing outlier volume. And we need to see it close probably under that like 89 area. So now watching NQ here to the downside. And watching this on both the 3-min and the 5-min. If I don't get that candle to close the way that I want here on the 3-min, then I'm going to look to jump in on the 5, right, and trade that same setup. That was a very interesting candle close there, though. Someone spunked a massive order. Yes, David, if I get that combo, then I will let you know when I'm starting to look for an entry. I will let you know what my entry target is and all these sort of things. So I will always make sure that that is crystal clear to you. For now, right, we no longer have a bearish setup, right, on the 3-min. Candle closes actually a green candle on like the last second, right? So now this is more looking like a bullish scenario because we've seen bulls, right, defend this area significantly. So what we're generally looking for here is always a strong reaction from one side, right? So strong bullish reaction, for example, and then a bearish failure before we jump in to the upside, right? And then it's opposite to the downside. So we want to see a strong bearish reaction, a bullish failure, and then bears reclaiming control and jumping in once they've reclaimed control. Okay, NQ may be setting back up again here on the 5-min to the upside. Very, very impressive volume. This is going to be second biggest volume of the day by the looks of it. We're going to be targeting 911, never forget. Right, so that red line here. And same thing, now we want to see, we've got strong bulls, right, as identified by this 10-10 candle. Now we want to see basically previous areas of resistance act as support. And for bears to be able to fail breaking down under that area, right? So a previous area of support is previous high of day. So we don't want to really see it pull back too much further below previous high of day, right? Which is this yellow line. Now a little fake out below, no big deal. A huge move down, right? Tells me that it's going to be like choppy, indecisive, gross price action. So far, pretty good defense of that area. And stop loss would be 845. Okay, still moving a little bit too fast here to the downside, so I'm not convinced that I have an opportunity to jump in here yet. Right, so now we've seen that previous area of support, right, not hold. So we've seen a bullish failure, not a bearish failure, right, after our confirmation candle. So again, no reason to jump in here. And again, if this sets up, right, we can maybe take a look at this now in the 10 min. So far, no action here so far, right? Not anything stupid, not rushed into anything. And we're getting a possible 10 min look here. 5 min, too deep of a pullback to really feel confident in this, right? 20 points of risk now, 25 points of risk would mean that I'm going to struggle to be able to even get one contract here. So I'd rather wait to see maybe a little bit more space here to the upside, right, for one. For the indicator overload. But yeah, it gives me just a bit more space to play with a risk-reward ratio, right? I've got 100 points of follow-through here that I could expect versus like 30 on the 5 min. So I'd rather, yeah, play with a little bit more space here. And it'll be the same process that we just went through there on the 5 min. But on a longer time frame, right? So we're going to want to see that previous high of day act as support, right? So that red candle high act as support. Don't really want to see bears be able to pull back much below there. And then if we do, we should be able to get a tight enough risk-reward ratio, right, to justify taking the risk here. So a minute to go here. Let's see how it shapes up. And then again, even on this 5 min, we've not missed out on anything, right? It's moved 10 points maybe. So, okay, it would have walked away $200 richer. But had to have survived a unreasonable amount of drawdown. So we've not missed out on any opportunities here yet. Understood? Okay. So same thing here now, right? We're going to map out our zones. Let's see where this thing finds support here on a gentle pullback. We don't want to go in much further, right, than that like 48 area. And then we want to see basically elevator up, right? So elevator, quick price action above previous high. And then a gentle pullback into our entry zone. So, okay, 48.25, still a reasonable stop loss. So far, it's kind of taken like it's creeping higher, right? It's not moving quickly with a ton of enthusiasm. It's moving lower faster than it's moving higher, right? So we need to still see that previous area of resistance to turn into bullish support. We have not seen that with clear conviction here yet. Let's see if that 48.25 will hold as a possible stop loss location. That would be great if it could. That would allow me to buy 2 contracts. If it runs too aggressively, then maybe I'll have to buy 1. But as is right now, I am sizing for 2. Okay, that's much better, right? Elevator up. So now we want to see a gentle pullback here into our entry zone. So around, right, 64.50. Now, if we don't get that, right, well, we're getting a chance here. So still looking, right, for that 64.50 entry. Just missed it. I was trying to decide if I go one contract or two contracts. So I'm going to switch now to one. And just a gentle little pullback here. Anything under 73.50 is, in theory, a good entry. So let's see. Anything above is a bad entry. Okay, guys, I am in. Average price, $870.25. One contract. $848.25 stop loss. Not a great entry. So green indicates that I am long, right? Let's see if I can get bailed out here. So as you can see here, right, in NQ long, 21,870.25. My position sizing, one contract. Stop loss, 848.25. That should be very, very clear to everyone over what my current position is, what my risk is, right? Things along those lines. So it should not be, right, surprising over what I've done. It's understood? All the information you need, you should be able to see at all times. Everyone understand, I need visual confirmation here, team. Okay, good. Let's see. We might have survived there, a worst case scenario, but I don't like how long this is taking. Right, generally on my trades, I should be green right away. I'm a point off. So let's see if this thing can run here now, right? But the longer it takes, the worse it feels. And yeah, a suboptimal entry here for sure. Chased it probably a little bit too much. Okay, so let's see if I can go here. So the thesis was correct. The stop loss has been fine, but the timing on this trade has been wrong. Right? I've spent 5 minutes in drawdown, which is too long. So it's got to run here pretty much now. If it doesn't, I'm going to get out. Again, and the reason why I'm willing to get out early potentially, right? Because if the trade is strong and it starts to behave the way that I can expect, I can always look to jump in later, right? So I don't need to be like so pot committed to a single decision that that's the only one I'm willing to take, right? Now this thing is starting to behave a little bit better, right? 270 bucks here now. It's not too shabby per account, but it should have been more. There should have been triple, with a deeper entry and more contracts. And so made a little bit of a mistake there. Debating a little bit closing here, just a little bit. Because, yeah, there's just been a few things I've been wrong about here. Just wrong on timing. Yeah, I'm still higher high, higher low. That's not what's bothering me. What's bothering me is my entry timing. Yeah, I should have bought an entry at 64, not at 70. A deeper pullback under that green line would have been much more profitable. So I chased my entry just a little bit, I would say. Take profit is the white line. You can see that here. Take profit here is the white line. Guys, my trade should be incredibly clear to everyone, right? There should be no confusion over what I'm doing. It is boxed in, right? So take profit is this top number here. Stop loss is this red. Entry is anywhere under the green. Come on, guys. We got to be on top of this. Like everything you need is on my chart here, right? Everything you need. So you should be able to answer your own questions by just looking at my screen. If you can't and you don't know what it is before you take the trade, don't take the trade. You should not be coming up with your profit target after you've entered the position. That is ridiculous. Right? We always draw our fibs from our profit target to our stop loss, right? Always. So if we're going to neglect that and just chase and hope that we get bailed out and hope we get lucky, you're playing a losing game. Guaranteed. Do you understand? JR, do you understand? JR, do you understand? We will not ask again. Again, we've survived worst case scenarios here reasonably well. But I still hate my entry. It's 10:34. So now I've been in this position for how long? 15 minutes. 10 minutes. And I'm neither particularly correct or particularly wrong. Oh, I might get stopped out here. JR, you can see right here is the interval, man. Please, 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 please. Man, all the information you need is on the chart, right? I can't. I don't know how else I'm supposed to make it more clear. The time frame is right here, right? NASDAQ 100, E-mini futures 10, CME. That's the 10-min time frame, right? Guys, it's hard for me to be patient when I'm trying to explain how I'm managing my position, but then have to explain questions that you should have asked before you entered a trade, right? So it's got nothing to do with patience. All the information that you need is available to you on the chart. If you're taking positions or you're taking trades without answering those questions before you take them, then all you're doing is creating more anxiety than you need to take on a position, and you're making your job a lot harder than it needs to be. So profitable trading is all about being prepared and being proactive, not reactive. I am dealing with too many reactive questions, and I'm trying to stress how important it is to control those variables before you enter a trade. When you're trying to answer that or trying to play catch up just so you can make money all you're doing is setting yourself up to lose more than you planned. I will not tolerate bad processes, because all that does is it costs you money in the future. So it's got nothing to do with patience, right? I'm here to teach you how to make money, how to get better, and how to improve. If I see things that I don't think are good habits or are lazy questions or are things that you can answer yourself, I will let you know that, right? Because it ultimately is there to help make you a better trader, answer those anxieties, and improve your technique. If I have to hold your hand so that you make money, then there's easier ways for me to do that, right? That are going to be more profitable for me. If I'm here to actually teach you and educate you and help you get better, then yeah, I'm going to give you pretty frank feedback so that you can improve. And it's got nothing to do with feelings. I'm not attacking anyone personally. I don't know any of you, right? You're just a name on a screen. But I want you all to become as successful as you possibly can be. So you got to take it seriously, right? There is no, this game is far too competitive to like fuck around, right? And so if you're going to ask me to tolerate that behavior, well, I'm going to say no, right? Because that isn't going to help you get there in the long term. So it's got nothing to do with patience. It's expecting a certain level of preparation so you can actually perform at a high enough level. If you can't answer those basics and you're still chasing trades, you don't stand the chance. You're going to make more, you're going to lose more when we're wrong, right? And you're going to make less when we're right. So my risk is I want to be losing no more than $500 per trade. So it just depends on what I'm trading, right? If I'm trading NQ moves $20 a point. So if my stop loss is less than 25 points or 25 to say 20 points, I'll buy one contract. If it's like 15 to 20 points, I'll buy two. Right? I'll do all those things. On ES, right, it's $50 a point. So my objective here is to always be within $500 of a max loss per trade. And ideally losing less than that if I'm wrong, right? My ability to lose small is a better indication of my ability to win big in the future. Again, if you go into the trading docs, there'll be a position guide book that'll show you how to size your positions based on what contract. Alternatively, right, if you go into the paper trading feature here and you set this up, set your stop loss, you can see what your dollar risk is, right? So you can play around with your entry, play around with your units, play around with all those things. until you're at your $500 level or less. That's why the paper trader is so valuable and why you need to practice those good habits. Personally, I trade Top Step X, Tradeovate, and Interactive Brokers. I don't know if I have three favorite prop firms. I think they're all pretty much the same. The three biggest are Apex, MyFunded Futures, and Top Step, at least in the future space. But they're all the same, pretty much, right? Like, choosing a different prop firm isn't going to make you more profitable. Choosing a different charting software isn't going to make you more profitable. Like, that stuff is all a distraction over the variables that actually do make you money. Right? It's focusing on your position sizing, focusing on your stop loss, focusing on closing your trades as your P&L is increasing. That'll make you money. If you do those three things, no prop firm is going to punish you for that. And it won't matter who you use, right? Then your only risk is, are you with a reputable enough company that actually pays out traders? The three that I mentioned do pay out people, only seeing issues where people break their rules blatantly. I worked for a hedge fund. Okay, now NQ is starting to move. So let's see if this thing wants to behave nicely here. We're pretty close to that 900 barrier. So if I'm going to trust a breakout, I probably want to see it break out above that zone. And then, right, I'm going to target the next price here, right? So a 21.9 breakout has space towards 22,000. I don't ever think that giving myself a bigger stop loss is going to make me more profitable. In my experience, my most profitable trades or my best ideas are usually green right away. So giving them more buffer in a day trading environment generally does not actually create more money. It just creates more hopium in my experience. And then changing your position sizing is all relative to each individual. So in my opinion, David, like everyone has a different number that breaks them and different flexibility on how they want to manage that position. So some people will maintain a level head when they lose $200, but not maintain a level head when they lose 500 or 1,000 or 15,000 or whatever the number is. And so you have to find what works for you. I had one contract on my first trade of the day here. I'm fine with that sizing. My idea here is that if my idea is correct and I get good follow through and things behave the way that I expect, that I can always add to winning trades and build up my position sizing. You can do that with both micros, with minis, with stocks, with options, with whatever you want. At this point, David, I'm looking for it to break out above 21,900, break and hold through that area, and then go from there. CL's getting a little bit interesting for sure. So when I started out trading, JR, I went through, it was my first job after graduating college, or graduating university, I should say. And so I got put on like a training program for 3 months. And then after that, I worked with a senior trader for the next 2 years or so. And then after that was managing a version of the strategy. The way that it works though, when you're trading for a fund, at least when I was working, I didn't have very much discretion. So I wasn't the one taking on risk. I wasn't the one deciding on what the bias of the portfolio was going to be. My job was to be just to execute trades, right? So someone would be like, okay, we're looking for a short on crude towards $74. We want our stop loss to be this. We want our exposure to be this. And my job was to execute that trade basically as well as I could, right? Either get a better price, manage our risk better, or get further follow through, right? So it's different than what it is trading institutionally. Okay, we're gonna be looking at CL here, possibly on the 5. And so I did that job for 6 years before I ever decided I was ready to trade on my own. And then obviously after 6 years, right, you learn what their strategy is. You learn, what they want you to focus on. A lot of those things, right? A lot of the way that I trade is very similar to those ideas, right? The candlestick concepts that I talk about, the risk management concepts that I talk about, the pyramiding concepts that I talk about, right? We're all very similar to how I was trading institutionally, but the setup trigger is my own, right, these days. Okay, so starting to watch CL to the downside. And we're targeting 74, right? That's the first number here after the red line. So our first profit target here is going to be $74, which is now the white line, right? And we're looking for a good reaction here. And a good reaction is defined as a move lower faster than a move higher, right? So right now it's kind of like teeter-tottering between how fast it's moving low and how fast it's moving high. So we haven't really seen bullish failure here yet. And we haven't really seen that bears are in control either. possibly go stop loss at 35 as well. And this would be on the pullback entry technique, not the aggressive entry technique. So from 27 to 35, right, you'd be risking about 80 bucks a contract. So if my idea is to stay within a $500 max loss, I'm probably buying 5 contracts here, maybe 6. And then obviously the deeper pullback I buy, the more sizing I can get. Now, might not get the setup I need here. And 2 reasons, right? So, one, my initial stop loss was at 23, right? That was the original area. It pulled back above that zone before breaking down. So, it just did not give me the reaction that I wanted. After establishing a stop loss at 26, it hasn't pulled back into that 74.20 to justify taking on the trade again. And again, I will always tell you guys when I enter a trade and when I'm starting to look for an entry. It won't be a surprise. So see here now, right, we're at 60.60 on ES. That means that my next profit target would be 60.70. If I get a look. Still possibly interested in this 74.20 entry if I can get it. Not enough volume on the 5 min, so I'll stay away. Three min. It's right on the cusp here. What do you mean by that, David? More or less? What do you mean? Yeah, because most people are taking holidays, right? So like retail traders, they want to take, or they want to trade when they got time off, right? But institutional guys, the people that actually move the markets, they want to chill. So now here, right, still a low vol pullback, higher high, higher low. No indication that that's bearish control here yet. CL doesn't appear to be giving me an entry as of yet. And I don't have enough space now from this candle towards 74 to justify placing any risk. Actually still an inside bar by the looks of it. Maybe do a stop loss at 56.50. So the only thing I don't like about this ES setup right now is that this confirmation candle, so this 1051 candle, couldn't clearly hold above previous high of day. It got stopped there, And then now we've seen 2 rejections, right? Basically above high a day. So that's maybe a little bit less appealing. Or I'd like to see it hold above that high of day, previous high of day, before I'm hyper aggressive. It's also, what, almost 11 a.m. Setting up a little bit more now for like mean reversion environment, right? Or a mean reversion time of day. Historically, you don't make very many highs, new highs a day between 11 and say 1:30, 2 o'clock Eastern. So now we're possibly, say, like our radar, right, is starting to think, okay, maybe there's an opportunity for weak extension, right? Bulls are exhausted here at these highs. They can't seem to break out through their resistance levels. If we can see some sort of indication of bearish control, we can look for a mean reversion trade back down towards low of day, and then possibly go green to red. Now that hasn't happened here yet, but we still got some time for that. You're correct. It should be 60-70. So mean reversion, right? We'd want to see a failed breakout and then candle 1, 2, or 3 on increasing outlier volume, right? So bigger than previous bar, bigger than white line. So we want to see a rejection, and we want to see that rejection be supported by volume. Again, hasn't happened here yet. We got lots of time. And then CL, right? If we see this thing break down on volume under 74, then we will have an opportunity to target 73.50 and we can reset. Yeah, the white line here is the 20 period moving average of the volume. So I need it to be greater than average as well, right? So increasing and greater than average for me would be outlier. And then in this circumstance, right, now we need to see CL hold under 74. We have increasing outlier volume, but now we need to see it hold under 74 in the next 50 seconds. We're unlikely to get increasing outlier volume, right, on the indexes. So crude may be our most likely bet here. So 20 seconds to go. Okay, so didn't do it on the 3-min time frame. So now, right, we're going to see if we get that same confirmation on the 5-min. So now we've got 2 minutes to go here on this candle. Same thing, need to see it get increasing, need to see it get outlier, and need to see it close under 74. Alternatively, right, we could do the opposite as well, right? If we see a really high volume fake out under 74, like we've seen, 73.99, and then a reversal candle, right, that looks like candle 1, 2, or 3 at increasing outlier volume, we can again look to possibly play that mean reversion setup. And that would be like a Bollinger Band reversal, targeting probably 74.50-ish midpoint. So we have some options, just a question of if the market wants to cooperate here for us. Okay, so now we've got increasing outlier, right? So we're now looking for this candle to either close under 74 or as a green second most bullish candle. Right, so close either under 74 or above 74.12. In between will mean no setup. Okay, didn't give me the close that I wanted, so now we pass on the burden of confirmation here to the 10-min. And same process, right? Want to see increasing outlier volume on a close under 74, or now, right, a high volume reversal over 74.12 on increasing outlier volume. So 4 minutes to go. And then as you guys can see here, right, 10 min, there's the time frame, right, inside the ticker name, right next to it. Yeah. So JR, if I get a mean reversion setup, I'll be targeting the midpoint here, so 74.50-ish. If I get a breakdown setup, I'm targeting 73.50. And again, if we close that no man's land, no worries. We'll keep waiting, right? we definitely have a chance to close here under 74. The thing that might be missing, right, is now that increasing outlier volume on the 10-min time frame. So we'll see. $1.40 to go, maybe has a chance. Nope. It's independent setup, David, right? So I didn't get what I wanted on the 5-min. I have the same setup essentially on the 10. So I'll treat it independently. I don't like doing multi-time frame analysis. Really what I'm trying to do is I've identified what my daily trend is or what my daily bias is. And then I'm looking for the first time frame that matches my daily bias. So it seems unlikely to get increasing outlier volume. So again, I'm continuing to be patient here. If I don't get another trade, no worries, not the end of the world. Now, red day to start the year off, not exactly what I wanted, but it's a very reasonable red day. Right? I'm one trade away from being green, half a trade even away from being green. So I don't need to do anything silly. Okay, so didn't get that look there on the 10. So now we're looking on the 15. Or, right, if we get a reset here on one of these shorter time frames, we can again switch back to that. But price action has gotten a little bit stuck here in the last few minutes. So we don't need to front run anything too aggressive. Ain't that the truth, Robert? Taking a trade is like taking the bus. If you miss one, there's always another bus coming. And if I can't accept a small red day, then I'm never going to survive playing this game long term. Because there's going to be plenty of red days in my career, plenty of red trades. I had something like 100 posted in the Discord. I had 135 losing trades last year. It's a lot of losing, right? There's 220 trading days. Yet I still won on 62% of my plays. So that's what the pre-market plan is here, right? So here's what my plan is for the day. I have a 2 out of 3 without volume, which means I've got weak trending price action here to the upside. So I'm either looking for a strong bullish continuation here higher, right? That invalidates that without volume. Or I'm looking for a trend reversal on impressive volume, right? To indicate that I've got that new momentum. So it's once I get a setup trigger at my either high, right? So breakout through the opening range, or a rejection here at this high, or a rejection at one of these levels. I'm anticipating there to be a momentum shift at those areas. So anticipating there to be a high volume reaction at those psychological zones. And then can go from there. So maybe now starting to have an opportunity for that reversal scenario here. This 3-min just below outlier volume, so we're going to wait for this on the 5. And yeah, we'd be targeting 74.60. So has a good chance here. 2 minutes to go. No, I took like 355 trades last year. So like 1.5 trades a day, something like that. Okay, 50 seconds to go. I don't know if it's average. There's a unlimited amount of ways to make money as a trader. So I wouldn't say that there's like only, one way to trade, or only one way, or, one amount of trades to take, or whatever it is. My idea here in general is to take every idea that I think is a setup and to trust my back test and to execute without discrimination. Okay, so here, right, definitely setting up for a possible mean reversion idea. And like I said, targeting 74.60. So now going to map out my fibs, right, from profit target to stop loss. Everyone's a little bit different. So some people have made like 20 grand a month. Some people make 6K a month. Some people do more. Some people do less. And it really depends on how much leverage you have, right? To go from there. But so there's too many variables to be able to answer that super cleanly. So now, right, we have to think about a couple things. Do we want our stop loss to be low of day, right, on this reversal thesis? I mean, I think you could do 10K a month with a 150K account. But like with trading, it's a little bit, how do you call it? Like a little bit inconsistent, right? So there's gonna be some months that you make 20 grand, some months you make 5 grand, right? So I always kind of describe it as being like a real estate agent. Sometimes you got months where you're hot, right? And you're crushing it and you're making a lot of money. And then, sometimes it's January and it's minus 20 outside and no one wants to go view homes, right? So I'd be looking here at a possible pullback scenario with a stop loss at low of day. So stop loss 73.97. And I'd like to see an entry pretty low, right? Because at 74.12 to 73.97, I can't really get a position sizing that is very justifiable. Like per contract, I'm risking 200 bucks, right? So would like to see a deeper pullback so I could buy at least 5 contracts. So that would be like 74.07. So let's see if we can do that. Stop loss would have to be low of day. And let's see. Well, my objective is not necessarily for you to copy all my trades. It's up to you on if you want to do that. My objective is to break down my process, what I'm doing on a daily basis, in as much detail as possible so that you can make these ideas your own. I think the more, that we adapt our own personalities to certain basics, then the easier it is for us to deal with the anxiety that comes with trading, right? If you understand why you took something, you're going to feel a lot better about that decision than worrying about why did I take something, right? So obviously my goal here to be is as transparent as I possibly can be, but the people that consistently do the best make it their own. So they take these basics, they take these risk reward principles, they take these risk management principles, they take those core concepts and adapt it to fit their personality and create a margin of error for themselves that way. Okay, so a little low vol inside bar, no big deal. I do expect 74 to act a little bit like a magnet here now with the size of this pullback. So I'm waiting for that reaction around that zone first before I click submit. Hey, that's awesome news, Jeff. The Wicked Witch is dead. So I'm just watching to see, right, how price action behaves around this area here. Again, I wouldn't be surprised to see it touch 74. So I'm buying myself time to make this decision here. And now any entry under 74.07, right, is going to be a better risk reward entry. So now, right, instead of risking 500 bucks, I'm risking 250. Now 150, right? So, okay. Touch and low of day. Let's see if it bounces here. And so far, all we've done here is helped ourselves avoid getting stopped out, which is a good thing. Now maybe put our stop loss 73.96. And then see if we can get separation back up above that 74 area and then look for an entry. So still no tremendous amount of separation here yet. Right? No real indication that bulls are in control or that bears are in control yet. Better. Not always at the same time. I'll usually end it around 11. But if there's tradable opportunities, I'll keep trading until the market stops moving. So aggressive technique, Eric, is stop loss at the low of your entry candle. The pullback technique is stop loss at the like low of your confirmation candle, or like low of day in this context. Okay. So again, a little fake out under. Now stop loss would be 73.94. Well, yeah, that's why we haven't entered here yet, David, is because this pullback has happened probably a little bit more aggressively than what a strong bullish reaction would look like. We've seen it make a little fake out lower, possibly trap some bears here again. So we're back in business a little bit. And we're back to 5 contracts. Maybe less even. Okay, still fine. I mean, my idea's not dead. We haven't held under previous low of day here. It's 2 attempts to knock down through 74 that have not held. So it does feel, I don't say more likely, but does feel like there's some probability of that being the low of day, or at least low of the morning. Will it now give us an entry based off of that? That's to be determined. No, it's just a risk management thing. So just don't lose X amount. Okay, so now we can possibly look at the aggressive technique. Stop loss 74.03. Right, and we're looking for the aggressive because it's now made a higher high above this fake out candle, right? So if we see it pulling back and making a new low of day, that would not be a very strong bullish reaction. So now that it's made a higher high, it should continue, right? If our thesis is strong, it should continue to go higher. If it doesn't, then our thesis is probably incorrect, and we know that we should walk away. Okay, good reaction, right? That was faster higher than it was lower. So now let's see if we can get a little pullback here. And we're looking for a pullback into approximately this yellow line. All right, so I am in long, guys. Average fill price, 74.13, 5 contracts. Let's see if this thing can go. If you missed your entry, there was your second opportunity to get it. I keep getting too loud on my Apple Watch. Come on. Okay. Stopped out. Of course. So could possibly try again here, right? Same thing. Stop loss at 74 now. And just mean with that fake out. Very unlucky. Very unlucky. So I'm down about 900 bucks on the day here. I should have been green on this trade. Top Step, My Funded Futures, and Apex are the three biggest in the space. Personally, I have accounts with My Funded Futures and Top Step, and then obviously trade my personal. So AV or AIVD, it's Top Step, Apex, My Funded Futures. I also use Interactive Brokers for like the family fund that I manage. Can't believe I got shaken out there. No, I mean, it happens. It's not the end of the world. So now possibly looking for NQ rejection here, right at these highs. We can get increasing outlier ES as well, right at that 65. And I love NQ. She's my favorite. $20 seconds to go. Be close from a volume perspective. Okay, we got ES instead. Whoops. So fake out, bearish engulfing candle, bearish engulfing on volume, targeting low of day here. Excuse me. So stop loss would be 65.75 for now. Haven't made a lower low either, so we could go do high a day potentially too. So we'll go 68.50. Okay, good rejection there. And right now I'd be looking at 3 contracts. And if I'm going short, right, I want to be selling on the uptick, right? We're still moving just a little bit too quickly. I'm just watching this reaction around 67 very carefully here. Yeah, target would be low of day. Correct. Still no entry, right? Still not the correct reaction on this pullback. So being very patient. $11.40. Okay, gonna start looking here. Just being patient, being patient. Does feel like you might want to try to fake out first. So when I say I'm looking, right, all that means is I've got my order window set up. And I've just got my finger on the trigger, right? Sounds good, Steven. Good to see you in here today, man. Have yourself a great day. Still watching here, still watching. Hey guys, I am in 65.75. I have 3 contracts here. Right? And red means I'm short. And let's see if it can break. Let's see if it can crack here. Come on. So far, so good. See, the difference on this trade here right away is you're pretty much green right away, right? Now, I might have just jinxed it, but let's see if this thing can sustain and hold these lower lows and really start to push us down. Otherwise, I will take it and run, right? If we close above this 64.50, I will get out. So if we can't hold lower lows, right, then that's not a good sign from bears. I can look to reset and potentially play this thesis on a different time frame or a different entry. Or if we do hold, right, then it should be a good sign of continuation lower. So far, so good, though. So far, so good. So it's just about a 1R move at this point. So if I do decide to close this position, I want to put my emphasis on closing this as my P&L is increasing, not on a pullback, right? I want to maximize the profit here. That was a good reaction so far. Very good reaction. Let's get that next leg lower. Maybe we can look to pyramid into this and build up some more sizing. And so you'd want to have your stop loss right then at 64. Right, if this thing breaks down. And if average price, right, is 65.75, maybe buy 2 more contracts to be still above that yellow line as an average price. Now, not quite there yet. Hasn't made a lower low yet. I'd like to see you make a lower low and then pull back. I will look to potentially build up my position if it continues to behave strongly. Yeah. I want to add to winners, not add to losers, right? And then when I add to winners, I only want to be doing it when I can be risk-free. So I won't do it if my average price is above my stop loss. Sorry, below my stop loss in this context. So right now, I wouldn't be able to do it. Maybe on the next candle. Yeah, well, I mean, it's that's the basic idea. Now it's not quite, we're not quite ready to make that decision here. This is starting to pull back more than I like. So it's got to die here pretty quick. But this is no longer mathematically viable to, whatchamacallit, pyramid in. Right? Because now stop loss would have to be pretty much entry price, which is not sustainable. Come on. So this is no longer behaving the way that I would like. Come on. Last chance. Green right away and then pulling back. I think I have to find the close here. And again, right, if I'm wrong on the close, I can always reset and jump back in at a better price. Now it keeps getting stuffed, but then it's getting stuffed but not moving anywhere. So I am out, guys. I have closed this position at 65.50. So got stuck post entry, right? So not a perfect reaction here. So we'll try this again if it continues to set up, but that didn't quite behave the way that I wanted or expected. So it feels a little bit like it might want to make another leg here before it breaks down. So we can always try this again. And volume seems to have completely disappeared. Yeah, sounds good, David. We'll talk soon, man. Again, it's just hanging out right at that entry price where it feels like maybe deja vu to that CL trade, right? Where it shakes us out and then breaks down. So I'd rather just take the little one tick win, reset, and try again. Hell yeah, Kyle. It's going to be a great year, man. It's going to be a great year. Time 11:57. Alright, still got some time here before some one-on-ones. See, it definitely feels like the right call to have closed it. Just thinking a little bit potentially now about this NQ. Yeah, I definitely think that was the right close. All right. Now it's cracking. Okay. Oh, mean. Just like a little bit of a delayed reaction on everything here today. Savage. Okay, well, we'll definitely have a chance here on NQ, possibly on ES as well. Back in business. Again, it cracks, but then it bounces back pretty immediately. So again, we want to see it hold in 40-ish. Okay, 40 seconds to go. Let's see if we can close the 10 points. If you can't, I'll walk away. Oh, it is so cold here today, team. Oh my gosh. Now, a high volume reversal would not be a deal killer either. Does look like it's going to do that though. So now we'll switch to the 5. And since like 10 in the morning, it's pretty much not moved here today. So at what point is enough enough? Sounds good, Eric. Enjoy your day, man. We'll talk soon. And things will get clearer, right, as you put in practice and you get better and you improve. So don't worry. Okay, so possible reversal scenario here again. Targeting a move towards 900. Can't see it pull back too much further here. Can't do that. Okay, so stop loss will be 45.75. We need to see a breakout over 58.75. So you're risking about 13 points, right? So 2 contracts. Okay. And we want to see a gentle pullback here. Still watching. It's got a pullback 58, so it might be tough now. Come on, 4 points. Okay, so still watching here, still watching. Possibly go 3 min with an 860 stop loss. That's pretty interesting. Back to 45 as a stop. Okay, guys, I'm in long, 53.75. 2 contracts. Stop at just 8.45 on the dot. I'll go green. What are you doing? Let's see if this thing can go quick. Otherwise, I'm jumping out. Okay, I'm not green right away, so we'd like to see this thing go quick. Come on. Took the stop. Well, if I don't like the price action, I wait for deeper pullbacks, right? And tighter risk. So on that, I lost like 250 bucks. That's well within my max loss number. But no, my idea generally is to take every trade that presents itself and just allow the variance to play out. My variance will play out if my risk management is good. So I don't see myself placing any further trades here at this point, right? It's 12:15. Market's been in moody mode. So yeah, team, final call for questions here. Final call for questions. I'm going to go walk the dog and get ready for some one-on-ones. Yeah, you too, Michael. Have a great day, man. Oh, sounds like you're having a better day than all of us, Kiki. Enjoy Mexico. That sounds fantastic. Stay warm, refresh, recharge, and be ready to go once you're back. That sounds great. Yeah, Happy New Year to you as well. Oh, man. Just as I say I was walking away, they're starting to get some setups again. What do you guys think? How's everyone feeling? Finally getting that mean reversion look. $832 closed under that candle's low. Oh. We've made a lower low under that candle though, so we've invalidated that bullish buying. So that's kind of why I'm back to thinking downside. Stop loss, 850, 20 points, one contract. Or 839. Oh, I think I gotta take this. No, the distribution of results is random. And I'm still within one trade of being green, right? So it's nothing really to complain about here. So the thing that I want to stress here, right, is that if your risk management is good and you're playing with the risk reward that we play with, and we pyramid into positions like we want to when we get follow through, one win will take care of 15 losses. Right? So we trade in a way that makes our win rate irrelevant. It's kind of a vanity metric. And so we don't want to put too much emphasis on that. It's about finding opportunities where we've got a lot of expected upside, and then using all of our other risk management tools, our position sizing tools, things along those lines, right, to make that math work in our favor. So win rate's cool, but it's not the thing to focus on. Because you can have a 90% win rate, but if your average loss is 10 times bigger than your average win, right, doesn't really matter. You know, just today we haven't gotten the follow through we want, and that's the way she goes sometimes. But that's why we trade the way we do, so that we don't have to be perfect, right? We can be basically idiots with everything but our risk management and still make money. Yeah, I don't know if I like how bouncy this is. It's going like 5 points higher, 5 points lower, 5 points higher, 5 points lower. Hard to feel like I'm going to be able to get a good entry here without just draining mental capital. She like makes lower lows and then pulls back right away. It's going to be like just the choppiest trade down. Yeah, I don't think I can justify this. So yeah, team, final call here. Final call. I'm not going to place anything else here today. Sounds good, Sammy. How'd your move go, by the way? Good man, good man. Yeah, you too, Greg. Enjoy your day, man. Nice work, Jeff. All right, team. Well, if no further questions, I'm going to kill the stream here for the day. Same deal like always, right? If you have any questions outside of market hours, feel free to hit me up. I'll do my best to get back to you as soon as I can. Otherwise, looking forward to catching up with a few of you here in our 101s later today. And yeah, getting the year started here and absolutely crushing the next 219 trading days. So have yourselves a great one, team, and we'll talk soon.